Personal income tax versus company income tax. One of the biggest tax confusions in Nigeria is this: is my salary tax the same as business tax? Some people think once they register a company, they no longer have personal tax. Others think tax is only for companies, not individuals. Both are wrong. In this video, we're going to break down personal income tax, PIT, company income tax, CIT, who pays what, and why mixing them up can get you into trouble. Let's clear it once and for all. What is personal income tax? Personal income tax, or PIT, is tax paid by individuals on their income. If you earn money as a salary earner, a freelancer, a self-employed person, you are expected to pay PIT. For most employees, PIT is deducted as PAYE, pay as you earn. Example, you earn 300,000 Naira monthly. Before your salary hits your account, tax is deducted. That deduction is PIT. PIT is usually paid to the state government where you live or work. So if you're an employee, PIT is your personal responsibility, even if your employer helps you deduct it. Common misconceptions. Let's clear some confusion. If my employer deducts pay, I don't pay tax. Truth: you do. Your employer is just paying it on your behalf. Only salary earners pay PIT. Truth: freelancers and self-employed people also pay PIT. If I don't have a payslip, I don't owe tax. Truth: income is income, formal or informal. PIT follows the person, not the job. What is company income tax? Now let's talk about company income tax, or CIT. CIT is tax paid by registered companies on their profits. Important word again, profit, not revenue. Example, a company earns 150 million Naira in a year. Expenses are 100 million Naira. Profit is 50 million Naira. CIT is charged on the 50 million Naira, not the 150 million Naira. CIT is paid to FIRS, not the state government. So once a business is registered as a company, it becomes a separate taxpayer from the owner. Here's the good news. Not every registered company in Nigeria pays CIT. If you have a small company with a turnover of 100 million Naira and below, you will not pay company income tax, but you must still file that 0%. PIT versus CIT. Let's compare them simply. PIT, paid by individuals. CIT, paid by companies. PIT applies to salaries and personal income. CIT applies to business profits. PIT, collected by state governments. CIT, collected by FIRS. PIT, often deducted as PAYE. CIT, paid after calculating profit. Simple rule: people pay PIT, companies pay CIT. If you mix them up, you may end up paying twice, or not paying at all, and that can get you into trouble. What if I'm both an employee and a business owner? This is very common in Nigeria. If you work a 9-to-5 job and also run a registered company, you will pay both PIT and CIT. Your salary is taxed under PIT. Your company's profit is taxed under CIT. They are two separate taxes for two separate sources of income. Ignoring one can attract penalties. You can check out the tax calculators with the link in description. So let's recap. PIT is tax on personal income. CIT is tax on company profits. Salary tax and business tax are not the same. Understanding this helps you stay compliant. In the next video, we'll talk about VAT, the tax everybody pays, but almost nobody understands. If this video helped you, like, subscribe, and share it with someone still mixing salary and business tax. See you in part 3.